Hi everyone, welcome to the channel. Today let's discuss about moving average and Bollinger Bands. So starting with moving average, there are two types of moving average, simple moving average and exponential moving average. So today let's understand both these moving averages and I'll show you how we can form a powerful trading strategy using these moving averages. So let's go to trading view and let's pick up any random chart. So this is a chart of Nvidia on monthly time frame. So here we can see that we have two moving averages, simple moving average as well as exponential moving average. And for both of them, I've used 20 as the input. So in this chart, the orange line is the simple moving average, while the green line is the exponential moving average. So the way how moving averages work is it takes the average of the last n number of bars. For example, here we have used 20 as the input, so it will take the average of the last 20 bars and then it will draw a line based on the average, and that's how we get the moving average lines. The difference between simple moving average and exponential moving average is that simple moving average just creates a line based on the average of the last 20 bars, while exponential moving average gives more weight to the recent price action and it reacts quickly to the price action as compared to the simple moving average. So over here we can see that the green line reacts instantly to the green change to the price change as compared to the orange line. Exponential moving average is suited for intraday trader who works on the smaller time frames. However, simple moving average is used by positional traders or long-term traders who work on larger time frames. So let's understand how do we form a trading strategy using moving averages. So here I'm using the same chart of Nvidia on 5 minutes time frame. And since we use 5 minute chart for intraday trading, so I'm making use of exponential moving average over simple moving average. I just forgot to mention this earlier that moving averages acts as a dynamic support and resistance in the moving market. For example, you can see here as the prices are moving upward, the moving average is acting as a support. However, moving average acts as a resistance when the prices is up, when the prices are moving downwards. So here I have made use of the exponential moving averages 5, 10 and 20 with a color input of green, yellow and red, same as the traffic lights. Well, I'll show you the settings over here. So you can see over here that I have added the input as 5, 10 and 20, and this is the style that I've used, like green, yellow and red. So the way the strategy works is when the green line is above yellow line and red line, which you can see over here, we enter in a buy position and exit as soon as the green line crosses the yellow and the red line over here. On the other hand, we enter in a sell position when the green line is below yellow line and red line, and we exit when green line crosses the yellow line and red line over here. So when the green line crosses the yellow line, it basically gives us a warning that there is a possibility of trend reversal. As soon as it crosses the red line, it gives us the confirmation that trend is reversed. That's how we use the moving average strategy for trading. But here we need to keep one thing in mind, that moving average is a lagging indicator. Also, it works only in the trending markets, meaning we can only use moving average when the candlesticks are either in upward trend or in downward trend. But this strategy is ineffective when the market is moving in sideways trend. Well, the question that arises over here is that how do we know that the current market is trending market or it is a ranging market, that is the sideways market? The answer to this question is either we can make use of support, resistance and trend lines, or use Bollinger Bands. I have already created a video on support, resistance and trend lines. I'll drop a link in the description. So I'll just quickly add Bollinger Bands over here. So Bollinger Bands indicator works with 20 simple moving average with 2 standard deviation. So like if you see the settings over here, so it's the 20 simple moving average with 2 standard deviations. So this is basically the default setting, and it is recommended to use the default setting as well for the while using the Bollinger Bands. So the way the Bollinger Bands works is like when the market is moving in a sideways range, like over here, the bands are more narrower. On the other hand, when the market is moving in a trend, like in an upward trend or in a downward trend, the bands are more wider, as you can see over here. So While forming a strategy of Bollinger bands with moving average, what I'll do is, like, when I know that the bands are getting more wider, so that is the beginning of the trend. In that case, like over here, I'll just enter in a buy position over here when the green line is above the red and yellow line, and I'll exit somewhere over here when the green line starts going below the yellow line and the red line. Okay, over here again, like if you see over here, the downward trend is starting, as we can see that the bands are getting more wider. I'll enter when the green line is below red line and yellow line in a sell position, and I'll exit somewhere over here when the green line is above red line and the yellow line. So that's how we form a powerful trading strategy by using Bollinger Bands and the moving averages. So I hope you have understood how to form a trading strategy using Bollinger Bands and moving averages. So I hope you have enjoyed the video. Thank you very much.